What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be going over in this video is the fact that it is entirely possible that behind the scenes, naked shorting investigations are starting, which could potentially be very bullish for us as AMC or GameStop shareholders. But I know that there are two sides of that coin, and people have different thoughts on whether or not they actually want these investigations to start now or after the squeeze. But what we're going to cover in this video basically caters to both trains of thought in that situation. Now, in addition to that, we also have a proposed rule change delay, NSCC 005. This is a rule change that I actually really like, and I don't really like to see it getting delayed. But again, this does happen when these rules are pushed out so quickly. Now, we also have Aron coming out and basically giving us an absolute gift as AMC shareholders. Everybody knows about the vote to basically raise the amount of shares that Aron is able to issue by 25 million shares in order to dilute the stock price in the actual share value of AMC further. Now, he has come out today and essentially said that is no longer on the table, and we are going to go over that as well. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button. So at the current time that I am recording, AMC is now trading at about $51.60. Now, we did see a pretty significant jump up to the $55 range this morning, but that was pretty short-lived. We dipped back down, came up, and have been in a downtrend for the basically past couple of hours. Now, I do think that it is possible that we see AMC jump up before close, but I also want to touch upon the option chain going into the next week and the potential for a gamma squeeze. So this week, we can kind of see by the open interest, there's nothing really jumping out at me. So we can see that this $60 strike which typically has a lot of open interest, meaning there's a lot of contracts being held at this specific strike price. They're only at about 13,567 contracts. So what we're seeing right now is actually very good in terms of setting up a gamma squeeze over the next couple of months. As we all know, when we take a look at the monthly options expiration date for essentially any stock, the open interest in volume is typically higher. So when we come over to the next monthly options expiration date being July, we can see that across the board, a lot of these contracts have gotten a lot less expensive, meaning that it's easier for retail investors to purchase these actual contracts. Now, I'm not saying to go out and basically just start buying options contracts willy-nilly, hoping for a gamma squeeze to happen, but I do know that people are going to be looking for cheap contracts, and the fact that we have been kind of trading in this range, having a drop in implied volatility, it does set up for a possible gamma squeeze down the road. But for these next 2 weeks, I really don't think it is very possible. So when we come over here, this is going to be the first naked short selling lawsuit that we have seen basically over the last couple of years. So this involves BTIG. So according to the SEC's complaint, from December 16th through December 2016 through July 2017, BTIG mismarked as long or short exempt over 90 sale orders from a single hedge fund customer, totaling more than 250 million in sale orders, comprising of nearly 160 million shares of stock. So we know this is happening in our markets. They take out short positions, they mark them as long or mismark them, and it does not get counted into the short interest or the reported short interest. But before we go any further, we do have to point out that this article came out and these violations were basically made known to the public at the end of May of 2021. So what this shows us is that the SEC is basically building a track record for coming out and saying, hey, we are not going to take this anymore with these naked short selling violations, and we are actually going to try and do something about it. But let's see where this goes. We can also see that they did not have the shares of stock that the hedge fund sold in its possession. That is naked shorting. So now how does this play into the AMC situation? This is where the threshold list becomes very important. So when we come over here, we're also going to get into why being on the threshold list is not the end-all be-all for a price increase, but I do want to explain this as well. So a threshold list is a list of securities that failed to settle in the previous 5 trading days. They are published by various exchanges in accordance with SEC regulations. Everybody should know this by now. But what was brought to my attention by my buddy TMI, the Masked Investor, shout out to him for sending me this info yesterday, this little excerpt. He also has a video about this, so make sure you guys go check his out as well. So right here, by requiring that these failed transactions are regularly reported on a threshold list, that the SEC and other regulators can identify clues that naked short selling may have occurred. So moving on to this actual list, when we come over here, we can see that AMC was added to this list on June 25th. But a lot of people have been saying that this week or next week is going to be the time period where we see a massive price spike in AMC because they've been added to this list, and that there's a 13-day settlement period after they get added to this list. But what we have to keep in mind is when we come over to GameStop's, we can see that GameStop was actually on the threshold securities list in the beginning of December. So we can see here GameStop, they were on and off this list for an extended period of time. And we actually take a look at this chart over here. This is going to track the amount of days that AMC and GameStop right here were actually on the threshold securities list in 2020. We can see that AMC was on it a total of 129 days, and we can see that GameStop in 2020 was on it for a total of 61 days. Now, we didn't really see these massive price movements in these stocks in 2020, so I don't want anybody really going all out saying the squeeze is coming soon just because of AMC and GameStop potentially being on this threshold securities list. It is a good thing to see, but again, like I've said in a lot of my previous videos, I do not believe that there is going to be one end-all be-all piece of news that comes out and basically is going to be the deciding factor on when we end up squeezing. So I think we need to think of this from a little bit of a broader perspective. What is going on in the market right now in the timing of everything? So we know that BTIG has that naked short selling case against them right now. We have seen in that Investopedia definition of what exactly the threshold securities list is, that the different regulatory institutions can get some more insight into exactly what is going on with naked short selling in any given stock when they are placed on the threshold securities list at any given time. Now, in addition to this, last week, we also saw Biden's big business crackdown, bad for Wall Street behemoth. So we can see that Ken Griffin is pictured right here. And there's essentially an antitrust case that could be brought against Citadel in the coming weeks, basically due to them having so much control on what goes on in the market due to their role as a massive market maker. So everything is seemingly starting to come together in terms of all of the good news that we are starting to see for AMC. All of these different other broader market things that we are seeing, like the reverse repo spiking, the collateral crisis that we have been talking about, that it does suggest that we could potentially be close to something big happening with AMC and GameStop. Now, I also want to bring this up as well. So this is going to be NSCC 005. This is essentially the proposed rule change that increases the minimum required fund deposit from $10,000 to $250,000 for all of the National Securities Clearing Corporation members. Now, they recently just delayed this to August 12th, 2021, so that is going to be the date that we could see this increased margin requirement end up occurring. Now, I'm not that happy that this is occurring, but at the same time, with the amount of volume that they are pushing out with these proposed rule changes, it seemingly we're getting one or two of these every single week, that it does make sense that they are not going to be able to basically just get them approved right away. These things do take time because it is a government organization. It's like thinking about getting through the DMV really quickly. So when we come over here, we can also see Aron released this tweet today. It's no secret, I think shareholders should authorize 25 million more AMC shares. Obviously, Aron wants these more shares so he can pay off debt, expand the business, and be in a better fundamental spot. But he goes on to say, but what you think is important to us. Many people said yes, and many people said no. AMC does not want to proceed with such a split. Now, I did see some confusion about this. He's not talking about a stock split. He's talking about division amongst AMC shareholders. So there's a split between people that think, yes, we should increase the amount of shares that they can issue by 25 million that they would then issue in 2022 or beyond. And there's a lot of people that are saying no. So we are canceling the July vote on more shares, but all of the other voting pieces are still on. There is still a vote, there is still a shareholder meeting, and no more such request in 2021. So a lot of people are going to be very excited about this. But again, like I have said in a lot of my videos and live streams, I do not care how you vote as long as you vote and make your voice heard. So now let's get into this collateral crisis really quickly with the reverse repos. So when we come over here, we can see that on Tuesday, July 6th, we had another reverse repo, which is essentially the banks offloading their cash to the Fed, the Federal Reserve, and accepting treasuries. So we can see that there is about 66 participating counterparties and 772 billion in reverse repos that is occurring. So we are seeing the reverse repos kind of consolidate in this $700 to $800 billion range, with some spikes all the way up to almost $1 trillion on one specific day, which was really insane to see. So here is what I believe could potentially happen with AMC in these reverse repos. We know that the banks and the institutions that are participating in the reverse repo market have way too much cash on their balance sheet at the current time. So what they're doing is they're trying to maintain these regulatory standards and participating in the reverse repo market. But we also know that a lot of hedge funds, institutions who are trading are massively over leveraged. We know this because the margin debt outstanding in the United States right now is about $850 billion. Now, in 2008, that number was about 400 to 500 billion, just to put that into perspective. So the Fed is not going to keep this reverse repo program going on forever. Eventually, they are going to wind down these reverse repos. What's going to happen then is that the banks are still going to have all of this cash, and they're still going to need a place to offload it, but they're not going to. So when you think about over leveraging, what happens when an institution is over leveraged? They have to deposit more cash or securities into their accounts. The bank does not want more cash. So I believe that the wind down of the reverse repos is one way that we could get these forced share recalls that could end up setting off the squeeze, because it's going to get to the point where it's not even going to matter if the hedge funds can gather up more cash to put into these accounts. The banking institutions do not want that anymore, and they're going to say, hey, we are going to de-lever all of you. So that is going to conclude this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I'm trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.